Now, elsewhere, SK Hynix planning to raise up to $29.4 billion, tapping investor demand for memory chip stocks. You can get the flavor of today's deals, a lot of AI. The landmark U.S. listing could rank among the top 5 largest share sales ever. Jake Silverman, Bloomberg Intelligence, joins us now for more. Jake, it's a big deal. Why do it?
Yeah, I think for Hynix, really the goal here is to sort of narrow the valuation gap with Micron, because they've historically, not just them, but Samsung as well, have historically had a gap in valuations compared to their U.S. peers like Micron. So this is an opportunity, I think, for investors to no longer see SK Hynix as at a discount to Micron, but maybe trade around something of a more similar multiple than they have in the past. How
should investors be thinking about those multiples? I know you're expecting some big numbers when it comes to Micron's earnings later this evening. It's this whole debate of, are these still cyclical companies? Are they not? How are you currently thinking about that?
Yeah, it's interesting because I think one of the conversations I have most with investors is what is the actual right multiple to pay for these companies? Typically at cyclical peaks, you start to see the multiples actually contract quite a bit down to like low, mid-single digits. And right now, I mean, if you look at the forward earnings, it's closer to around 10x or so. So the question is really, is that the right multiple? Is that the multiple that investors actually want to pay for it? And do we see potentially more upward earnings revisions where that multiple maybe is actually closer to mid-single digits or so? And then, how much longer does the cycle have to run, as you pointed out? Could we see the cycle run through 27 into 28? It kind of depends very heavily on AI capex and also capacity expansion from the different players themselves.
Well, to that point, and this is kind of what Ryan and I were talking about with the earlier deal of how important it is to be able to get a cheaper cost of capital, to have access to capital itself. What does it mean for an SK Hynix to just bring in more money from a U.S. listing?
I think the real benefit to SK Hynix is that it kind of reduces some of the capital outlays that they're planning in the future. But I don't think that they're really struggling for cash. I mean, if you look at the free cash flow they've generated just over the last few quarters, and if you assume that the memory cycle is going to continue at least through this year and into next year as well, I don't think they're going to be struggling for cash. So I think really the idea of bringing in some additional capital is when they do plan to expand capacity, maybe in the next down cycle, do they burn cash again? It's possible, right? Because that's what we've seen in the past. So, if they bring in, I think it was around 29 point something billion, it basically just, they can expand the capacity by that amount and no longer have to worry about that.